Alrighty. Right there. Pretty cool buck, actually. It's got some interesting stuff in here about failed auctions and how to tell the difference between a weak high or low and a strong high or low. And I mean, that might be obvious to some folks, but down here, for example, you know when you see it, you're like, oh shit, that's a pretty strong rejection. Now, if you're watching this in real time, which I was, it dropped rather quickly. It's either 1 minute candles, but it's what happens inside of the candle, right? So you might have the first 45 seconds of that candle kind of sitting here, and all of a sudden, the last 15 seconds of that 1 minute candle, it just drops, goes to the next candle, and then within, say, the first 10 seconds of that next candle, shoots up here, and then the next candle shoots rather quickly up. So you really have to be watching it in real time to see what those candles are actually doing. And that gives you a pretty big hint as to the aggression in the market. So we had a pretty strong rejection here of price. Now, all the way back over here, I was looking at these highs. This is Pacific time, so West Coast America, and as you can see here, we have obviously a little bit of volume as these highs are generated. Not a lot of resistance hammering down immediately. And if you go down here and you look at this guy, you can see how fast it happened. But also you look on the right and you look at the volume profile. It's very spiky, right? So you look over here, for example, there's another little hint at this profile, these 2 points. You can see how this is more rounded. Now, I'm still learning. That might not have anything to do with it, but you'll definitely notice that price lingered in this area longer. It sat up here and lingered for a few minutes, and that is what's known as a if you read the book, for example, that's a weak high, and then especially up here, you see how price is as it's going up. It's been lingering for a while. So I watched it. I've been watching this live since right around midnight, just a couple minutes after midnight. So let's go right about here. So I was watching this move up, saw it linger a little while, saw it drop, and I was thinking, okay, I think we're going to reach a good solid high above these points during this session. So it's 4:08 a.m. on the West Coast right now. And my thoughts, let me make sure the audio is actually working here. Okay, good. So my thoughts are quite simply that we really, in order for it to decide what it's going to do, for example, we've been in a downtrend last couple days. In order for it to really decide what it's going to do, it's got to get some strong selling action in. And we haven't seen strong rejection style selling yet. So we got some good rejection right there. And I'm watching this up in this area. And I'm thinking, all right, well, it's lingering. I want to probably buy it. So I wait till it drops. I bought it. I can't show you my other software where I'm conducting the trades because it's a proprietary system. I trade for another company. I'm a contractor for them, so I cannot actually show you what I'm doing on it. But what I can do is kind of explain my thoughts on certain price levels. And so, looking at my software, I went long around 1.1135. So let's go back there. Yeah. So I went long. Let's look at the time that I went long. I went long as it was dropping. right in this area right here, 1135. As the candle spiked back up, I was like, oh, let's go long. And of course, it drops back down and it goes up. So the real rejection that I was waiting for, and I'm still learning, obviously, but it's right here. So that felt pretty good. So price goes up, lingers for a while. Now, because this spent so much time lingering, I didn't see any real strong rejections. So I thought, all right, well, probably just let it sit for a while, because I knew it eventually should go up above 1.1148. That's where I'd like to see. And so I really should have taken profits right in this area and just kind of waited, because whenever price moves up as strongly as it did and consolidates, you know, it's really, with the euro dollar, it's got so much back and forth movement that in order for it to move up, it's more than likely not going to just go from here in that consolidation and then straight up. It's probably going to pull back and then, you know, then fulfill your target later. So here's what it did. It went down here to the point of control, as we can see in real time. And it's jostling with it and just kind of letting it snow, you know. Yeah, I should totally be a radio host because I'm great with words, obviously. But you're not here to listen to me for my eloquent speech. You're here to see what this thing is doing and get some insight. But since there's nobody in chat right now, nobody's actually here. So anyway, yeah, first time making a fool of myself. But what I think is going to happen is I think we should eventually, before returning to a massive downtrend, I think we need to get up here. So it should reject somewhere. Now, it might reject. It might drop down and reject somewhere down in this area and then move up. You'll notice one of the interesting facets is, in trading, people talk about wedges, right? So they talk about something going up and down and then getting, you know, tighter and tighter. Well, what I've noticed is price is continuously, it's searching for, it's in price discovery mode all the time, right? So it's more, instead of like a wedge that's getting smaller and smaller, for you new traders out there, and I'm obviously not talking to the experts, I'm talking to the newer traders, people that are just getting into Forex and are curious about the markets. Now, I've been in the markets, stumbling around, trying to figure this all out on my own for 4 years now, since 2015. And anyway, what I'm getting at is that as price is in discovery mode, where it's oscillating up and down, you really get more of an expanding wedge. Especially, this is especially true with the euro dollar specifically, where you get a consolidation, it pops above the consolidation, you know, a bit of a breakout. Everybody's like, "Ooh, let's buy the breakout," and then of course it retracts back to the mean. And this happens time and time again, and it really shakes people loose. So what they're doing wrong is they're trading breakouts, right? So you don't want to buy it as it's breaking out of a consolidation. And again, we're talking about the euro dollar here specifically. All right. It says YouTube not receiving enough video to maintain smoothing. Yeah, it's because I need an Ethernet cord to my laptop, which I don't have hooked up right now. I'm doing all this off Wi-Fi. But nobody's watching, and this is the first episode, so I don't think anybody's really going to care. But anyway, so my point is that you get consolidations, you get breakouts, you get, and you know, especially pairs like the euro dollar, you get a lot of price pulling back into the consolidation, freaking people out. So think of it more like an expanding wedge, where price is like, okay, cool, we've been here before, let's go outside the boundary, spend a little time there, okay, let's come back, now let's go to the other boundary on the other side, go back down there, explore, see what, you know, what traders doing down there. It dropped very fast when it was dropping, and it grew, and then it shot back up almost, well, about as fast actually. So again, I should have closed my position right in the blue zone here. Now, this blue zone, for those of you that are not very familiar with volume profile, it is the outside portion of your 70% volume. So 70% of the volume is occurring inside the green area, and then the other 30% is occurring in the blue area. So what that means is, in layman's terms, is a lot of consolidations happening inside the green area. When it trends, it's going to go into the blue area and push downward, and you'll see volume growing as say a price is falling, you'll see the volume kind of coming with it. And as far as picking the direction, that's from what I've understood so far, it's the direction part comes into pretty much just looking at how price responds to a given price level. Now I noticed something interesting, which is kind of cool. As this price is dropping and hitting this lower level, this volume profile. Now, of course, it grows, when volume gets poured into that point. But this point here, these little teeth actually grew quite a bit. They grew probably from about here all the way out to here. They grew quite fast, and it was interesting to see that in real time. And of course, that's happening as price moves up and down. You can just kind of watch it, and you'll see these fangs, shoot out a little bit taller. Now, of course, the farther this is from the right to the left, the most volume is traded. So at this price level with the red line, that's your point of control. That's where most of the volume is traded. And it still looks like my video output's not really working. So I don't know if you guys are going to see any of this. Just running a test. I'm going to go back and watch this later and see what actually happened in the stream. But anyway, I'm expecting the price to test the 1.1148 level. I think it's going to pop through it. Simply because these two upper levels here, they're not super hard. They're kind of soft. They're kind of weak highs, and so price, what it needs to do is it needs to actually test above it and see what traders have their orders above it. And at that point, I believe we're going to get a strong enough sale aggressiveness that we can actually close our buy order out and then initiate selling. Now, what I obviously should have done was, near the top here, I should have said, I've got, 2/3 of the move that I wanted, but just get out and wait and then get back in down here. But I didn't do that, so I'm still learning. As you can see here, let me zoom in. You can see here that we have a consolidation. So we don't expect this trend to turn back up until we get a little bit of a downward spike. Just a final point, and a good example would be right here at the timestamp of 342. Where you have a little pop down. I'm expecting it to look like that. We just have one single candle popping down, and then it just rockets up and doesn't look back. So that's kind of what I would expect if I was out of the market waiting to get back in on another buy order. But like I said, I'm still in. My buy orders are basically flat right now. So I should have took profit earlier, but maybe I'll do that next Monday when the market reopens. So, stuff. Right now, my account is sitting at, it's with open trades, it's a negative, just over -1%. Looking to do, once this completes and hits my target, my account growth for today should be about 1.5%, give or take, for that trade. And then of course, if I'm still up, then I can sell at the top and try to get probably another 2% coming back down. So maybe finish the day with 3%. That'd be nice. Be a nice account growth, 3% for the day, especially being a Friday. If we can make that happen, I'll be pretty happy. Yesterday was pretty cool. Had a bit of a record. I'm regrowing the account. I made a lot of mistakes with it, and so I'm regrowing it right now. But I hit over 4% for that 24-hour period. Account growth, and that was pretty phenomenal. It's a pretty small account, but hey, that was 4%. I mean, who does 4%, right? That was pretty cool. I mean, a lot of experts do. So you see how it's taken off here from that flat bottom where it touched several times. So that's another thing that's pretty cool about this volume profile book. One of the things it talks about is what's called a failed auction, right? So you got weak lows, weak highs, strong lows, strong highs, but also talks about failed auctions. That's pretty interesting stuff too. So highly recommend you read about that. I don't want to spoil it for you guys, but down here you don't have a single price just popping down and back up. You have several points where Price is just sat there. So this is not a very strong rejection whatsoever, as opposed to this. This is a strong rejection. Price, when you're watching this in real time, it was only at this point for a split second. It did not like that price, which is a good thing. We want to be able to really find good rejections. So the other cool thing about this, right, with failed auctions, so price is going to come back to this to correct this price level. You can think of this as the book's talking about paintings in its example, but you can think of this as more than one person trying to own the rights to that particular price level. That's a stupid way to say it, but anyway, in an auction, you always want a winner, right? A single winner in an auction. You're not going to have two people win the painting at the end of the auction, right? You got to have only one winner. And so if you got, in the book's example, if you are, oh shoot, I'll just say it. All right, so if in the book's example, if you have two people willing to pay $2,000 for the painting, and then the auction just ends, the auction's like, oh, okay, it's over. We timed out. We're done. Well, you have two people willing to pay a higher price than everybody else, but nobody actually won. You don't have a single person winning the auction. So in that example, so with this price level down here, we don't really have a single point where the price pops down and then, okay, that's the end of the trend. Trend's going to change direction now. So what that creates is a failed auction, and that's an imperfection in the market. If you think of this up and down price movement as somebody knitting a sweater, right? They're weaving it in, right? And so the market makers that are basically conducting the buying and the selling, it's like they're weaving this in. And so you can look at this point down here as an imperfection that needs to be corrected. It's a very strong magnetic price point. Price will basically, if price is on its way back toward this point, in order to create what the market considers an imperfection in price, it has to pop below it and then pop right back above, which will look kind of like this over here. It'll be a downward spike, and that'll fix the 1, 2, 3, 4, 5, and 6 points where price touched the exact same point, which was we got one little pop down here that's pretty close. So the price level of 1.111331. All right, and as you can see here, it's kind of, I know it's kind of hard, but there's a little gray spot. So price did pop down below it just slightly. So technically speaking, that would be a correction. It's just so shallow. I don't think that's really going to count. I expect it to come down and actually pop down lower. The cool thing about this, though, is we're still in a downtrend. Now, I don't really care about people saying, oh, okay, we're in an uptrend, or oh no, today we're in a downtrend, because trends can change, right? You don't know you're at the end of the trend until it's over. And so it's like, well, what's good? What's the point of calling it a downtrend if you might be at the end of the downtrend? Well, the reason why I think our downtrend is still valid from a technical perspective is that we have some time down here. This was, let's see, 25th. So this was, yep, during this last Asian session. Price spent a little time. It's a rejection, but it's kind of a soft rejection. Now this is down at 11.27, and where price is currently right now. Now this rejection that we had is above that. So we have a soft rejection down here and a hard rejection above it. So what I expect is to have a hard rejection, but it has to be lower this soft rejection. That's what we need. And then you have a very weak low, and obviously you can see my note there. This is, so previous day, this would be Thursday afternoon, near the end of the New York session. So let me look at this back here. Okay, that's near the beginning of the U.S. session. And then, yeah, price shoots up there. But anyway, Thursday. And as you can see, there's a lot of acceptance, a lot of volume building at this point. So I think that our trend will not be finished until we get a price completion below 1.1116. I believe price still needs to reach down there before a real uptrend can begin. So I am just playing with the European session, watching it and letting it do its thing. So I believe what we're going to do is, before it drops too much more, I think we're going to get a correction and basically overcome these highs right here, getting the area filled in of 1.1148. And then once we do so, once we establish a good significant high, then I think we're going to get an actual downtrend and take out 1.1116. And then the market can figure out what it's going to do after that. But I think that's what we really have going on. Everything within those numbers is just banks building their positions and letting the little guy retail traders do their thing. Yeah, so that's just how the market plays. Especially with the euro dollar, it's a lot. It doesn't just go to where it's going to go. There's a lot of up and down flow to it. And if I am going to do further episodes, for one, I'll try to hook up an Ethernet cord to my laptop so I don't have to upload on Wi-Fi. That's a really stupid idea. But I don't think anybody else is watching. So let me go over here. Yeah, nobody's watching right now. First stream, just a test. Just messing around. But see, the thing is, so I've been doing this for 4 years, like 2 months. And it's been the most frustrating undertaking I have ever done in my life. Learning how to trade the currency markets. I mean, why am I doing this? And with the way the world is right now, with the economy, the evaluation of the dollar, fiat currency, all that stuff. The money that my grandfather saved, it's worthless, right? The money that my dad put into savings, it's worthless because basically I'm going to say it's probably every 10 years or so we lose about inflation. Essentially the value of the dollar is halved, right? So inflation, to my understanding, I'm not going to say that I'm exactly on the money here, no pun intended, but in approximate terms, from what I understand, it's every 10 years the inflation doubles, right? So if you're spending $10 on groceries 10 years ago, you're going to be spending $20 for the same groceries today. Obviously, we can see, you've gone to the grocery store and all that stuff, and you remember years ago being able to fill up your grocery cart. As a child, I remember my mom filling up the grocery cart for $20. Whole cart, same size cart as he had today. So carts are staying the same size. But yeah. So anyway, all that bullshit and what's going on with fiat currencies. Trading is just the way to go, dude. It's the way. If you can make money trading the currency market, you can build enough income for yourself to escape the theft of inflation. All right, that's really what it comes down to. If you made it this far into the video. So we're getting a nice upshoot here. We have a very, very flawed bottom to this little upshoot that we're getting. So I'm pretty darn sure we're going to return to this price level and break through it, the price level of 1.1133. We just got to get up here first. Got to break out the top, and then we can go down and break out the bottom. Good stuff. So when you think of it this way, it's so much easier to trade if you're doing the opposite of selling a breakout to the downside and opposite of buying a breakout to the upside. Because all you're doing is getting the worst price of a breakout, and then it turns around on you. And I used to do that all the time. It was frustrating to no end. So essentially, you reverse what you're doing. You start doing the opposite of what failed. It's only going to go up or it's going to go down. It's not. It's two-dimensional. Not in that regard. It's not that hard. But I digress. Currency trading is one of the most difficult endeavors somebody can get into. You know, just your average Joe doesn't have any education, just wants to jump in. Yeah, maybe I'll trade the markets. But not that easy, folks. Took me 4 years of stumbling around the internet, watching people showcasing their MACD, you know, using the MACD setting as like 50 and 10 instead of 12 and 26. And then they left the 9 alone. All sorts of, just one random example, but all sorts of strategies. I've studied Elliott wave theory. The only thing that I can think of that I haven't studied is GAN analysis. GAN waves, I guess. That's about the one thing I gave up before that. I gave up studying that kind of stuff with Elliott wave analysis. I read most of that book. And I could just tell that like it just didn't make sense. I've studied all the major indicators you can think of: RSI, stochastics, MACD, CCI, all that standard stuff. That's what I started with. It's all bullshit, guys. It's just all those indicators are pure bullshit. They were originally designed for the stock market, for one. Now, the stock market, it's intended to have a value where you're trading something of intrinsic value, right? A stock is representative of a company. The company should have its own intrinsic value, right? So it's producing products or it's producing service, etc. When you're dealing with currencies, you have one fiat currency against another fiat currency. Guess what? What are they backed with? Right? Their respective governments, the faith in that currency. They don't, as you know, it's fiat. There's no real value, right? So the euro has no real value. The US dollar has no real value. So it's one against the other. Neither one has its own intrinsic value. So that means price can be, it's not like, okay, well, it's dropping, so it's got, you know, like a stock, right? So if the stock is dropping and the company is still worth something, you can buy it with reasonably expecting it to go back up. With currency trading, it can go anywhere. It can trend and trend and trend and just go anywhere. Look with Brexit and what's going on with, say, if you're trading the British pound against the New Zealand dollar, for example, that thing can trend. So who's to say what the real value is, right? It's just trending and going off. So my point is that indicators that are designed for stocks typically don't work for currencies, right? It's something, if you're a new trader and you're just watching this for the first time, maybe you've been trading for a few months and you're just kind of trying to figure this all out, just know that indicators that are designed for stocks, which most of them out there are designed for stocks, those indicators are not going to work for currencies, because as soon as you get your, say for example, as soon as you get your oversold on your stochastics, right? Oh, time to buy it. It's oversold. It's not oversold. It's going to drop again. And then it's going to go up, and it's just going to be all wishy-washy. So the volume profile is the only way I have found in my 4 years of research that allows you to see the important price levels on the chart. See what's really going on behind the price. Volume at each and every price. And as you can see here, now say people are, if they're selling these little these consolidations, if they're trying to sell the top of the consolidation and it goes down, that's fine. But you'll notice how pretty much everything on the screen is stopping people out. People that are trading, trying to trade these little breakouts. It's always reversing. It's always turning around and stopping people out. That's just part of the course. You got to expect it to react that way. So the market is sewn in a flawed bottom right here. That's not going to hold. Prices, of course, going up. So I expect it to hit the 111.48 level, probably blow past it. And then I expect it to run out of momentum and go back down. So let me switch back to the 5-minute here for a minute here. Get you guys a little more. All right, so this is on the left. This is Thursday's volume profile. 70% of the volume covered quite a large area. This is the day that I made a little over 4% on my account. That was the record day. I did not even take advantage of all of the movements you see here. I took advantage of a pretty small portion. I was trying to remember exactly what I did. It's intraday. So I was doing some selling. I think I did a little bit of buying. I know I lost a little bit of money on buying, and then I switched back to selling for the second time and sold a decent amount of this move down here. Now, then I closed up. I think it was about 3 o'clock in the morning when I finished, so closed up right around here. This video output low, so I'm just going to let that sit for a second and see if my live stream goes back to healthy again. See if the video comes back. Hopefully the recording of this is uploaded properly and doesn't have any buffering to it. So we'll find out first stream. But yeah. Auction market theory. So for you new traders out there, if you ever see this, volume profile is the study of auction market theory. And it's just go watch an auctioneer, auction off, say, paintings or whatever, and see how the bidding process works, because that's exactly what is happening here. It's how many, can I get any buyers? Can I get any sellers at this price? Okay, great. Now, can I get any, buyers at this price? And it just repeats over and over again. Never-ending auction, and it's a beautiful thing. This market in general, and just how market operates, as I learn more about this, it is a beautiful instrument. Like, this is just, I don't know the words to describe it, because it enables an individual to study the market, learn how it operates, and glean income from it. And I know I'm not just talking about investments, I'm talking about actual income. And that is a way that you can strike back and even the playing field. And when I say strike back, I'm referring to is against the big banks creating fiat currency, doubling the money supply every 10 years or whatever the exact number is, stealing the value of the money in your savings account. This is why I'm so passionate about this, is because trading the currency market is a way you get that back. It's a way to increase the amount of income coming into your pocket, which will combat the loss of value that your money has over time, your fiat currency. So if you make money trading, guess what? You need to go out and buy some actual coins, silver coins, gold coins, whatever you can get a hold on. Whatever you can get your hands on, something of intrinsic value. Look up Mike Maloney. If you're listening to this video right now, you've probably heard of Mike Maloney. Yeah. So the hidden secrets of money. If you haven't seen it, you should definitely spend a little time looking it up. Well, my open trades are currently sitting at a negative 0.1% for the 24-hour trading period, because I started off losing a little bit of money as I was trying to get in tune with what was going on in the market. I lost about 1%, and then I closed out those trades, watched it. I closed out the buy trades, and then I watched it drop, so I was obviously happy about that. And then when I opened up those buy trades again, I opened them up at the point of control. It dropped a few pips, so it went from a negative 1% to a negative 2% in my account open. And then it shot back up, and I got to, it was about positive 0.8 or so, I think, up in this area around the price level of 1.1143, and of course I want 1148, so I foolishly held it open, watched the drop, left them open, and now we're almost flat again. So if it hits my target, I should have a little over 1% account growth for the day, and if I was smarter about it, which I could kind of see this happening in real time. I should have said, hey, guess what, Luke? It's not going to go from here straight from the consolidation at 111.43. It's not going to just go from there straight up, right? It's got to pull back. Got to stop people out. That's how it works. Embrace it. Love it. Learn to love it. Let me zoom out here, get yesterday's volume profile reloaded on the 1 minute. There we go. Just under flat right now with my risk profile for the 24-hour period. Nobody's in chat. I'm sad. Nobody to talk to. At least it says the live stream health is green again. We'll see. So potential, what I could have made watching this if I was a little more on my toes, saying, I think I know what's going to happen. I would have closed up here at 111.41 for roughly 0.8 percent count growth, and then as it drops, I don't know if I would have sold it or not because this is a soft top right there. It's not a hard rejection. So as it's dropping, it's a retracement. As it's dropping, what I probably would have done is just wait for price to hit these high volume spikes. And that's why they're there. It's to show you support and resistance inside of a zone that's already been traded. And so I would have bought a little bit right here at 11.37. I would have bought again here at 11.36. And I would have bought here again at the point of control at 11.34. And I'm not just saying that in hindsight. Like, that's actually what I would have done. Because, again, like I said, this is a very soft top. It's not a hard rejection. So we're in an uptrend right now. All of this is an uptrend. Just retracements. And I knew that from all the way back here with these two tops being as soft as they were. They're not hard rejections. So I've been basically bullish this entire time. Confidently. And like I said, just still learning, still reading this volume profile book by Trader Dale. I got it on Amazon paperback for $8. And that's a steal. That's one of the cheapest trading guides that I have purchased. It's a little under 200 pages. And of the most value. Elliott, like I said, Elliott wave theory it just doesn't work. Gosh, that's gonna piss so many people off. For you, Elliott wave theorist out there. Now again, like I said, I'm doing this off volume profile. This is all very low time frame stuff. So if Elliott wave works for you, if you found a way to make it work, and it's probably on the daily chart or even the weekly chart, and you're investing with it, if it works for you, great, man. More power to you. I couldn't make it work, right? So what? Okay, obviously we're seeing a bit of a sag, and this just dropped a little too fast for me to take advantage to it. So I'm just gonna wait it out because it is very necessary for us to retest above these levels at 11.43, and also likely to retest above these levels at 11.46. So I'm on 11.48 for my target right there. That's where my trades are sitting, my open trades. Well, right now my account is sitting at an open 0.4, a negative 0.4. So that's not too bad. But yeah, what I'm doing is just marking out what I think is going to happen. Talking about it. Been on here for like 42 minutes. Probably should make sure, check my settings and see if this was actually public broadcast. If it actually is public for everybody to see. Trying to find the setting for that. No, Nobody wants to hear you whistle, Luke. Don't be a dumbass. Stream options. Should be public when complete. Basic info. Yep. Privacy on public. Category. People and blogs. Ooh, I'm gonna change that. Non-profits and activism. There you go. Entertainment. Yeah, I probably should set it up as entertainment because I'm gonna be one of the most boring people to listen to. So entertainment sounds like the appropriate category. Oh yeah. All changes saved. Video output low. YouTube is not receiving enough video to maintain smooth streaming. As such, our viewers will experience buffering. Hopefully not on the recording. We only have one watching, which I believe means myself. Nobody's in chat. And that is simply because this is my first live stream ever. Woohoo! And I think I got like 9 subscribers, which is probably family and friends. And they're all sleeping right now because local West Coast time, it's almost 5 o'clock in the morning. So anybody I know personally isn't gonna be awake. That's the other thing about trading. As you guys, if you new traders out there, will soon find out, is it's a very lonely business. Your friends and family, they're gonna look at you like, oh, you currency trader, oh, that's cool, that's weird, you know. And they're gonna think you can't beat the market. They're gonna be giving you all that kind of BS. That's just what they've been told, right? That's their view on life. They're gonna be happy for you. The people that actually care, they're going to be happy for you when you have success. You're going to end up working for that success a lot harder than you thought you would. It's going to take you longer than you thought you would. But if you think it's important, if you think not just making money in the market is important, which it is, but if you want to build on your skill set, if this is just like anything else, where you're working on improving your skill set, you're working on improving yourself. Here's a cool thing about trading that I really love. It teaches you so much about yourself. Fear and greed are 2 things that you will be exposed to. These emotions you will be exposed to so much when it comes to trading. You're gonna want to beat yourself up when you have a trade it's moving in your direction and then it goes back against you again. You're going to feel that rush of greed. Oh, I should have taken it right now. Oh my gosh, what do I do? It's going against me. What do I do? And you got to learn, and this is just going to come through practice, trading real money, because when you're trading a demo account, yes, you want to have a lot of practice trading a demo account first, so you can figure out where the buy and sell buttons are, and get a little functional practice, but you're not going to go through those emotions unless you're trading real money. That being said, you obviously want to trade small enough that the emotions you go through, the larger your trade size, the greater of the magnitude that emotion is that you're feeling, greed or fear. And it's going to be greed, fear, up and down, greed, fear. And it's going to flip back and forth, right? It's a roller coaster. And so if you are an upcoming currency trader or stock trader or whatever it is you're in the markets for, you are going to have to learn how to just expose yourself to this emotion over and over and over again. And so you're going to want to trade small enough that those emotions are not overwhelming. But you're just going to have to learn to deal with it. And you will find as you go through this process, and you're going to learn a lot about yourself, that in your day-to-day life, you'll have less fear when things happen because you've been exposed to this fear emotion and you've been learning how to deal with it. over time. And the same thing with greed, right? So if somebody, here's the cool thing I would have noticed about myself in the last 4 years. When it comes to money, I don't have that desire to, because I've always grown up poor, right? I've always been poor, I come from a poor family. So I don't have nearly that kind of rush of, oh my gosh, I need money. I just need money to, pay bills, make my rent on time. I don't have the same emotional attachment to money as I did 4 years ago. Watching money come into my account and come out of my account. And as I rebuild this account, you respect it, but at the same time, you just say money's just a tool, right? It's and I'm talking on an emotional level here, right? You can say logically, yeah, I put money where it's supposed to be. It's not too important to me. Whatever. But on an emotional standpoint, you have to go through these steps. Anyway, you get what I mean. It's experience, right? So, but the cool thing about it is, I think you'll notice as you go through this process that if somebody were to flash a bunch of $100 bills in front of you, you're not gonna have that kind of greedy reaction to it like you would before. Oh my gosh, I gotta have that money. No, if you're trading and you're seeing money move in and out, and you're getting used to it, you're building that emotional tolerance. And if somebody flashes a bunch of $100 bills in your face, you can be like, yeah, I know how to make money. I know how to get in the market, glean 1, 2, maybe 3% of my account in a 24-hour period. No big deal. All right? That's the kind of person that you want to become. So we're inside the range that I want to be in. So I'm just kind of waiting for price to shoot up. I think it's going to happen. Now, got a nice little top that we had there. So, again, so I've had my trades open this entire time since 1 o'clock in the morning, just a couple minutes after 1 o'clock. 1:11 is when I opened up those trades. Had them open the entire time. And before, I would have freaked out and closed them. Let's see, I would have closed them probably right about here as it's falling down, and my account still would have been in the negative. And then maybe I would have gotten lucky and bought them back down here. So anyway, the emotional roller coaster used to be pretty severe. And the thing about it is, you can run your analysis and you can say what you think is going to happen, but then you just gotta let it play out. The reason why I'm doing this live stream is for people just to see what I'm looking at and see my thought process and just kind of get a glimpse. That's my beef with not really beef, but when I'm watching people trade the currency markets, any account that I've ever had where, like for example, forexsignals.com, right? There's a good example. These guys are great. They do a quick analysis for about 15 minutes and they get out of the market, which is fine for people that are doing swing trading, right? Longer term trades, not intraday. So the idea of this type of stream is for people that are trying to do intraday trades, essentially scalping and a little more than scalping. If scalping is like a 5-minute trade, this is like more of a 2-hour, 3-hour, 4-hour trade, trading inside the day. So for you newbies out there that are just learning. So for somebody to sit down and actually stream the whole entire event and talk about different price levels in real time as they form and describe them for somebody new to the market, that's something that I think is hard to find these days. So if I end up continuing on the stream and doing several episodes, that's the whole goal. That's what this is for. So as it's dropping really quickly, I think what it's going to do is it's going to take out this low down here at 111.33. It might even take out the previous low we had back here of let's see, 111 29. It might take out that low, but I think it's going to get defended pretty well. And like I said, it's very much like an expanding wedge. Prices get overcome, taken, previous highs, previous lows get taken out, and then it reverses again. And that's the euro dollar pair for you. That's how it works. So, and this is the euro dollar pair. If you're going to approach it the right way, where you expect it to stop and turn around, and then stop and turn around again, then yeah, it's a pretty easy pair to trade. It doesn't tend to wildly go off and shoot off in a direction that you cannot recover from very often. It has a tendency to stop and turn around. So if you're patient and you can get in at decent price levels, the chances of it like going another 60 pips against you typically won't go more than that. Alrighty, and so for you newbies out there, if you're ever watching this, you can look at average true range on the daily chart using default parameters, right? 14. So I can do that. Do average true range, and so there's your ATR average true range. That 14. And of course, it says one pip. Well, that's because we're on the 1 minute chart. So let me go to the daily chart, and this is the correct number you're trying to get. We have, let me go to the end, 50, right? So average range in a day is 50 pips on the euro dollar right now. As you can see, if I were to go back to January, for example, its average range was 87 pips, and you can see it on the left side. This is where the number is, right there in orange. Gosh, I've been talking for like an hour. That's a good thing nobody's watching me in live chat, because they would probably do something more enjoyable, like dipping their head in a toilet seat or something, in a toilet bowl, something like that, than listening to me. Alright. So anyway, that's how you do it. It's pretty simple. So our average range right now is 50 pips, and that's average. It's been going more than 50 pips. Let me go back to the minute chart. But my point is that this is a nice, reliable pair that won't run away on you too terribly badly. Yeah, it's been trending down a lot during this week. So if you're trying to buy it, you got to be careful. So let me go back over to the 24th of April. I lost a little bit of money trying to buy this, and it kept dropping, and I never got it back. It was about a total of 3% one day, and then I think I lost another 3% the second day. This was last week. 24. So yeah, it was pretty frustrating, and so I sat down and said, okay, well, what did I do wrong? And this is before I got the volume profile book. I still had volume profile, I was still using it, but I didn't have the book. This particular book's got some, like I said, it's got some good stuff in it, so it definitely helped. And I'm still learning, but it's been a good journey, very much worth it. So basically, these inside movements here, they're a little bit harder to predict. When you get this consolidation where it shoots up and then it slows down, yeah, you can say it'll probably drop again, but it's harder to say that with the same amount of as the outer higher and lower ranges. So we're taking out the flawed failed auction that we had right there at 414, 408 to 414. So we're taking that out, and then we're probably going to reverse pretty soon afterwards. Pretty soon. So yeah, with these smaller ranges, they're a little bit harder to trade. It's easier to take the larger outer ranges and say, okay, I think I know what overall direction it's going to go. And since I am overall bullish, and what I probably will do next time is be a little more conservative, right? Once I have some profit and we're getting into a consolidation, I'll probably close out my trades and wait for it to drop and then buy it again. That's the essence of. You see how fast this candle is moving here. We ricocheted off of a level that actually has. Okay, well, this blue volume spike, you're saying it's less volume than the areas above it, but it's outside the 70% range, and so take that for what it is. But the important thing is that failed auction I was talking about. It's a very magnetic price. So price came down. You can see here how it put in one single. Okay, let me just fix this color arrangement real quick, so you can actually see behind it. So we have this low in the middle is lower than the low behind it and the low in front of it, right? It isn't like, and it's an edge. Different than this consolidation here. So it took this imperfection that was sewn into the market and it fixed it. Boom. There. Now, this might be the next upward wave. I'm not saying for sure, but it looks like it might be. But that had to happen at that price point. It needed to fix it. I've been noticing this where, whenever it puts in a failed auction, which a failed auction is several candle wicks reaching the exact same price point, right? So in a downtrend, it's bottoming out, same price level, same price level, same price level, and then it doesn't get a chance to overcome those price levels, and it goes up, right? So that's what we had up here. Price put in several identical price levels at the bottom of its range and then went up. So the next opportunity that had to go down, once it got close, then it fixed that imperfection, essentially. Market. You can think of it that way. It's fixing an imperfection. It's a pretty cool way to think about it. And then as you can see, the rebound was pretty strong. It's a pretty strong rebound. So we should it'll probably work its way up again. Now, again, remember, like I said, it puts in, it likes to retest highs and break them. Now, you can see how much time was spent up in this area. So this is a very weak high. So I think what's going to happen is it's going to break through this weak high and, of course, break through the other weak highs that are near it and get to my target. And if I was a smart person, I would be trading more of these inside ranges. But for now in my learning process, I'm putting what I'm thinking to the test and really waiting it out and saying, I think this is going to happen, and not being wishy-washy with my predictions. I'm just kind of holding my own feet to the fire, so to speak, saying, okay, I think it's going to get up to this price level. I'm keeping my trades open until it does. And that takes a little bit of guts. Not take a small amount of profit and just run away. I'm holding on. Dun, 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 dun. And also, here's a cool little thing. You see how it puts in these little hairs, these little top wicks? A lot of people, I used to make this mistake all the time. Whenever it would show several wicks, it's kind of moving up and it slows down. I'm like, oh, maybe I should sell there. Or here's one of the things I used to do, use a Fibonacci retracement tool from this top up here to that bottom and say, oh, it's at the 38% retracement. Let's sell it. Oh, it's at the 50% retracement. Let's sell it. And it gets stopped out almost every time. That, whenever I did it, that never, hardly ever worked. I mean, this is just blindly guessing with price up and down flows and trying to think of a halfway back reversal. And once you get acquainted with volume profile, you can see how flawed that is. It's comparing, wandering around in the dark, measuring things with a 50% stick, saying, "Oh, it's even up halfway. Okay, now it's gotta go back down." And learning how to measure them properly, looking at volume and the intention that the auction process has. Yes, it's moving up, it's putting in several little highs, and we're getting a little bit of resistance. This resistance here is incredibly weak. And the more times it touches that level, the weaker it gets. So we'll just see how my words play out. But yeah, I would not sell there. That's not a good point to sell. Account is currently at a negative 1% with my open trades. And yeah, I used to sell at points that looked identical to that all the time. I get a little bit of resistance. I get some candle wicks popping up at the top, and I think, ooh, it's going back down. I better sell. And then 5 minutes later, it would pop up above those points, and it wasn't pretty. Happened to me all the time. Gosh, we gotta get some people in here. We gotta get some conversation going. Maybe I can answer somebody's questions. Me with, like I said, I think I have at this point 9 subscribers. Let's find out here. And all of those 9 subscribers, they're probably offline. Go to my main YouTube channel here. Oh, I've got 14 subscribers. Nice. I think I have 9 on my other channel. Can I subscribe to myself? Huh? Maybe that'll boost my numbers a little bit. 14 subscribers. Man, I'm doing good. Gosh. I'm doing really good, guys. Oh, man. Well, if I keep doing these streams, they're going to get more interesting. Yeah. Oh, hey, Luke. Well, you said something about not selling there. It looks like a good selling point, right? It looks like I'd sell there. Oh, going up a little bit. Maybe I wouldn't sell there. It's gonna pop up. It's gonna go up there. It's gonna get. I think it's gonna get to 1.1148. I think it's gonna blow past that number. That's my target, boys. And gals. There's some lady traders out there. There's some smart ladies that I think they can learn about the markets. They do. Cool thing about, from what I've heard with female traders, which is pretty cool, is they don't have the same. At least from what I've heard, they don't have the same attachment to having to be right on their trades, so they tend to cut losers, sooner, and that's a really brilliant thing. So if that's the case, which I believe it is, women, they can make excellent currency traders because they tend to be, I would say, a little more logical about their decisions. They're making their decisions a little bit more on what they see on the chart, and if the chart says they're wrong, then they have more of a tendency of being able to close their trades. But what do I know? So you can see this little area that it's been going through right here at 1134.4. You can see that there's a volume gap. There's not very much volume at that price level, so it's always going to shoot through that price level faster than it normally would. So now that it's getting down as low as it is, it's probably going to break through that previous low. Knock everybody's stop loss orders out. And then it's probably going to go back up. So you can see where it stopped at so far, which is slightly above where it stopped at before. I have trouble accepting that. I don't think it's going to stay there. I think it's going to drop down below it and then move up. Oh, all right. There's somebody else that should be getting on trading. Somebody I knew. So I'm going to go talk to that person for a little bit and check in with you guys later, because nobody's actually watching this live. But yeah, so still got our targets valid. We'll see. I think it's going to drop lower. It's going to take people's stops out. Got to drop lower and then go. I think it's going to go higher. Get my target taken care of at 111.48, and then we can sell it. All right, boss. Take care, guys.